Blunt's Think Tank. Tonight we're going to be taking a look at the newest Federal Reserve H8 report that shows banks' assets are dwindling and liabilities continue to increase. This is something that's just been released by the Federal Reserve this past week, and I haven't seen any person talking about it, and that's quite concerning. It comes out. This report comes out once a month and is vital, in my opinion, to understanding liquidity situation currently going on in financial markets. Let's take a quick look here. But before we get to that real quick, we're also going to be talking about FTX, market makers, brokers, and a plethora of other things. Check this out.
Thank you. And let me conclude by describing what is going on here by a popular crypto commentator. If you set up an exchange where you're the market maker, you're the issuer, you're the prime broker, and then you trade against your own customers, you have a vested interest in creating the assets, promoting the assets, and manipulating the price of the assets. What you have is a crypto casino. I yield back. Yes. Thank you. And let me conclude by describing what is going on here by a popular crypto commentator. If you set up an exchange where you're the market maker, you're the issuer, you're the prime broker, and then you trade against your own customers, you have a vested interest in creating the assets, promoting the assets, and manipulating the price of the assets. What you have is a crypto casino. I yield back.
Anybody there? No? No luck. I think we're coming back. Yep, I got my audio back. Thanks very much, everybody. Sorry, microphone tweaked out for a second there. Does that sound familiar to any other company that you guys have just heard? That short video that I just played, did you guys see it on YouTube? Did you guys see it sound familiar to any other companies aside from FTX?
Hey boss, they're saying it's muted in the YouTube.
Thanks, man. I just fixed it. It should be having the sound back by about now. Thanks so much. All right, welcome back, my friends. Yeah, tell me if that sounds like another company other than just FTX, because I know, to me personally, it's a fitting description for several companies. Let's take a look at the assets and liabilities of commercial banks in the United States. Federal Reserve Report H8, released on December 9th, 2022. And as of yet, I haven't seen a single person talking about this. So as always, welcome to Boss Blunt's Think Tank. I'm here with the Think Tank in the Discord and on YouTube, Twitter. Thanks to everybody for joining us on Twitch as well. So this is a kind of a conglomeration of a bunch of different banks. There's 11 tables on this report, and each table is a different group of assets and liabilities of different commercial banks. Check this out. Check this out here. If I didn't fuck it up again. No, we're good. The total assets of the first table is about 5.5. Let me see if this is millions or billions. It's in millions. So everything has to be multiplied by a million. So this is 5.5 million in total assets and 6.2 million in total liabilities. And actually, it's in billions, excuse me. 5.5 billion in assets and 6.2 billion in total liabilities. You can see these deposits here, large time deposits. Other deposits are down, borrowings are up, and other liabilities, including trading liabilities, are up. And for those of you that are unaware, Other liabilities, including trading liabilities, includes on line 25, subordinated notes and debentures, net deferred tax liabilities, interest and other expenses accrued and unpaid, accounts payable, liabilities for short positions, derivative contracts with a negative fair value, as determined under the FASB interpretation number 39, which means they're using fair value market accounting. Other trading liabilities to which fair value accounting has been applied, and other liabilities, a very broad spectrum there. So the liabilities in the first table exceeds their total assets, whereas about a year ago they were even, 3.5 billion to 3.5 billion. Now you can see they're underwater here. Total assets and liabilities on commercial banks in the United States, table 2, shows you bank credit is up to $7.373 billion, which means that Americans have taken out more debt. There are more bank credit loans out. And let's see, 1 billion. That's $17,373 billion in bank credit, which is an increase of 1,200 billion from November of 2021. Their total assets are 22.7 trillion, and their total liabilities are 20.63 trillion. The residual assets a year ago was 2.14 trillion, and is now 2.10 trillion. So their residual assets have decreased. Table 3 on the Federal Report H8 this year. Again, huge increase from last year in the bank credit lines. You can see mortgage-backed securities here. It's also increased a little bit. Real estate loans are up pretty good. Commercial real estate loans are up slightly. Consumer loans are up from 1.6 to 1.85 trillion. The total assets is up by about $300 billion, and the total liabilities is up by about $400 billion, where they used to have 2.1 trillion in assets. After liabilities, they only have 2.09 trillion now, as of from 1 year ago. Domestically chartered commercial banks, okay? Domestically chartered commercial banks. Take a look at this. Their total assets was 19.6 trillion and is now 19.7 trillion. Their liabilities was 17.5 and is now 17.6 trillion. So a slight decrease of around 20 billion for these guys on that one. The assets and liabilities of domestically chartered commercial banks in the United States. Again, very similar here. 19.7 and 19.88 trillion in assets, which is they had residual assets of 2.17 trillion last year and 2.10 trillion this year. So again, reduction of liquidity after the Federal Reserve quantitative easing has started to subside. But we'll talk about the Federal Reserve reverse repo rate shortly as well, because that's not subsided whatsoever. You see the residual assets has increased by about 50 billion on this one. Large domestically chartered commercial banks went from 13.2 trillion in assets to 13.1 trillion. That's after liabilities is down to 11.6. That's almost flat on $1.45 trillion in residual assets on, $13 trillion in total assets. Table 8, small domestically chartered commercial banks. Now we're getting into the hot stuff here. It's fairly similar from last year for assets, but the liabilities is up about $200 billion. Their residual assets have decreased here by about $50 billion. Table 9, small domestically chartered commercial banks in the United States. Total assets from 6.56 trillion to 6.74 trillion. Their liabilities from 5.8 to 6.09. The residual assets is down from 707 billion to 650 billion after $6.7 trillion in assets. Table 10, assets and liabilities of foreign-related institutions. This is where it starts getting kind of nasty. The total assets 2.78 to 2.998 trillion now, And the total liabilities went from 2.8 to 3.03. And the residual assets after liabilities is negative $36 billion. Negative $36 billion, which is down from negative $22 billion last year. They had a couple of strong quarters where they were positive $48 billion towards June of 2022, but that's changed as of this year, obviously, as you can see, especially over the last few months. Table 11, assets and liabilities of foreign-related institutions. That's from $2.8 trillion to $3 trillion in assets, $2.8 trillion in liabilities to $3.0 trillion. They used to be positive $4 billion. They're now negative $6.8 billion. So as you can see, they're either flat or pretty much underwater or losing money from where they were last year. Now that quantitative easing isn't as prevalent, and quantitative tapering is starting to take place, and we haven't even begun to see interest rates affect the United States economy yet in the way that people have expected. That is definitely a lag on raising interest rates, and we're going to see that pretty heavily here soon. Check out this new Federal Register. What do you guys think of this shit? Self-regulatory organizations. This was on 5/9 of 2022. The New York Stock Exchange notice of filing of proposed rule change to modify Rule 7.31 to add regarding directed orders. The exchange proposes to modify Rule 7.31 to add a new subparagraph to provide for directed orders and to make other conforming changes to its rules in connection with the addition of this new order type on the exchange. The directed order, as further defined below, would be an order sent to the exchange to be routed directly to an alternative trading system specified by a participant. They propose to add this rule, which would define a directed order as a limit order. You can think of it as like the delimit order, similar, with instructions to route on arrival at its limit price to a specified alternative trading system with which the exchange maintains an electronic linkage. This would further provide that directed orders would be available for all securities to trade on that exchange. This would also provide that a directed order would not be assigned at a working time or interact with interest on the exchange book. They propose that the ATS to which a direct order is routed would be responsible for validating whether the order is eligible or accepted. The exchange proposes that these orders would be traded in whole or in part on the ATS, which is a dark pool, to which it is routed after receipt of the order, and any untraded quantity would be canceled. They would provide that during a trading halt or pause, an incoming directed order would be rejected. That is one of the issues here. Also, they would provide that a request to cancel a directed order designated day would be routed to the ATS. There's also adding definitions to the gross credit risk limit, and currently provide that the unexecuted orders in the exchange book, orders routed on arrival, and executed orders are included for the purpose of calculating the gross credit risk limit. So this is good, in my opinion, for retailers and broker-dealers in the sense that it's using these orders that have been executed for calculating their gross credit risk. So this is something, in my opinion, that does somewhat help retail investors. But again, check it out for yourself. This is kind of an older one anyway. It passed on 5/9, was published on May 3rd of this year. But I still think it's pretty important that people should be aware of what's going on with these orders, the directed orders and the delimit orders, etc. This is from August, however. They have, again, further regulation of exchanges and alternative trading systems. Check this out. The SEC today, on August of 2022, is proposing new rules and rule amendments to allow alternative trading systems to choose whether to register as national securities exchanges or to register as broker-dealers and comply with additional requirements under proposed regulation ATS. The Commission is also proposing amendments to their Form 1, blah, blah, blah. That doesn't really matter. It says these proposals would more effectively integrate the growing number of ATS into the national market system, accommodate the registration of proprietary alternative trading systems as exchanges, and provide an opportunity for registered exchanges to better compete. I am pretty fond of this regulation here that was passed in August. Again, I think it's one of the few things that, while it may have its downsides, I believe it to be one of the few things that does have, that is decent for retail investors, for myself as a retail investor, at least I should say. So I won't read this whole thing because it's extremely lengthy, but I'll put links to everything up here in the comment comments afterwards. So this is a dissertation. This is an electronic thesis and dissertation from a man by the name of Donovan Woods from the University of Mississippi. This is his graduate school thesis from January of 2021, in which he states that the impact of market fragmentation on stock exchange events and thinly traded securities. Basically, this is his thesis on why this is an issue. It is a dissertation presented in partial fulfillment of requirements for his degree of Doctorate of Philosophy in Business Administration for the Department of Finance for the University of Mississippi in May of 2021. Big shout out to you, Donovan Woods. This is an excellent thesis, and I'll read you guys part of this abstract. I'll try not to spend more than 5 minutes on this, maybe 10. We'll give this 10 minutes at least because this is really solid, really well done. It says, in part one, I analyze independent technological malfunctions that forced trading halts at various equity exchanges over the past decade. During each halt, all other exchanges remained open. The primary purpose of this study is to examine intraday trading activity before, during, and after a technological malfunction. Excuse me, there's too many people moving in the Discord. I'm moving up to another. My apologies. Too many people keep joining and leaving, so I'm just out of that Discord channel right now. We moved this into a private channel. So Donovan here, Mr. Donovan Woods, explains in his graduate thesis that the primary purpose of the study is to examine the intraday trading activity before, during, and after a technological malfunction, which are events that are neither driven by an informational event nor an order imbalance. Of the events that he recorded in this study, there was 8 technological malfunctions. A majority document a reduction in liquidity and an increase in short-term volatility during and immediately after a technological malfunction. He says, furthermore, these effects appear to be relatively short-term, but in a few events, I see abnormal trading as far out as 10 days. 10 days. These are these glitches that people are often talking about and saying, how is this just a glitch? He says, additionally, I investigate with impact. These events have an algorithmic trading activity and find that algorithmic trading activity increases intra and post suspension. In part 2, I examine the extent algorithmic trading and highly fragmented stock markets are related. I use multiple methods to determine the level of fragmentation and examine algorithmic trading activity. Additionally, I dissect this relation further to determine what influence trading fees have on algorithmic trading and the possible appeal that different fee venues provide algorithmic trading. He says he finds evidence that suggests more fragmented stocks will have more algorithmic trading activity and that this activity will be concentrated on make and take venues where algorithmic traders are paid a rebate to provide liquidity. I also demonstrate using the number of daily stock venues recorded by the SEC's MISSIPPI dataset, etc. He says, in part 3, considering the SEC's recent focus on addressing liquidity concerns for stocks with an average daily volume below 100,000 shares, thinly traded securities, I identify possible determinants of the poor liquidity of these types of securities. Among the commentary at a roundtable held by the SEC in 2019, I identified that there would be 3 prominent factors influencing daily liquidity in thinly traded stocks. And this might sound familiar to a lot of people if you've had issues with, market manipulation, if you've had issues with glitches, charts, and other things that seem unfair on the market. Some of these issues that he finds in these thinly traded stocks are spatial fragmentation, temporal fragmentation, and market making activity. I find evidence that suggests that temporal fragmentation and market making activity appear to be more prominent factors contributing to the poor liquidity of thinly traded stocks. I also find that the market is capable of creating liquidity on its own without special advantages given to select exchanges. So it's obvious that we don't need the liquidity fairy around to provide infinite liquidity and sell thousands of cars when they only have one title, providing and creating synthetic shares, selling synthetic trucks, synthetic cars with one title. That spatial fragmentation doesn't appear to be severely impacting transactions costs in thinly traded stocks. He also uses the tick size pilot program as a robustness check to confirm that temporal fragmentation and lack of market makers are two driving factors influencing the difference in liquidity between these and actively traded stocks. Here's an acknowledgement for his PhD program for this thesis. And it is incredibly well done. It's almost 300 pages, so we're not going to read every page, right? I'm just going to touch on the most important portions that I came through and kind of previously highlighted. We'll start here. Basically, he says that technological innovations over the past couple of decades have vastly changed financial markets. While positive changes are abound, a downside to technological innovation is the reliant systems require maintenance and sometimes malfunction. These financial markets, they have real consequences, ranging from a loss of investor confidence to a breakdown of the marketplace. For instance, in 2019 of August, Bob Pisani of CNBC reported a trade reporting glitch in the SIP for New York Stock Exchange listed securities created considerable confusion in the last hour and cast doubt on whether prices disseminated for major indices like the Dow Jones Industrial Average and the S&P 500 were accurate. Another trading glitch occurred during the initial public offering for Facebook, resulting in mass trader confusion and NASDAQ receiving a $10 million fine, the largest fine ever levied by the SEC against an exchange for poor systems and decisions making. What do you think about that shit, Cash? The primary purpose of this study is to examine trading around technological malfunctions. Technological malfunctions are events that are not driven by an informational event nor an imbalance of orders. You guys saw today Mullen, M-U-L-N stock ticker, get halted. And it's halted because of pending news. What that news might be. Ain't that right, brother? I don't necessarily know what the pending news for Mullen is, but I believe it's a lot more than just the 6,000 new vehicle order that they received. I don't think that 6,000 vehicles on order is a reason for a news halt. I have a feeling that there's some corporate action or some corporate news coming out from ticker MULN, and we'll see a lot more of that probably in the coming days. These technological malfunctions are not driven by informational event nor an imbalance in orders. We seek to analyze trading before, during, and after trading malfunctions to determine whether these non-informational events create transitory or permanent effects. So use a sample of 8 trading halts on various equity exchanges that occurred due to a technical issue and result in suspended trading while the issue is fixed. Analyzed technological malfunctions occurred during many years, obviously. They started in 2013 and through 2019. This is from 2021. So those are the technological disruptions that he has. This was written January 1st of 2021. As technological disruptions have not garnered a lot of academic attention, we rely on theoretical and empirical literature that explores these trading halts brought about by excessive information asymmetries or trading imbalances. This approach allows us to indirectly compare the findings and predictions of halts driven by informational events with that of our sample, halts that result from technical errors. Studies into the effect of traditional trading halts suggests these events produce a significant increase in quoted depths, the number of trades, trading volume, and spreads, the bid-ask spread of the NBBO, the National Best Bid and Offer, indicating a reduction in market liquidity. This is telling us... Well. Yeah, that's pretty exciting. Yeah, well. That's a great way to put it. This is literally telling us exactly what we already knew. When there is a lack of liquidity for market makers, there are traditional trading halts used in order to try to get people to place more trades, to increase trading volume, and for them to try to gain more liquidity in the markets. They not only find these effects on overall market quality for the individual halted stock, but also find significant liquidity impacts on informationally related securities. Think about what that means. Not only are these effects on the overall market quality for the one individual halted stock, it affects significant liquidity issues on informationally related securities. So other securities that are similar, that are affected by similar information, i.e. meme stocks.
Yeah, the emergency.
Their other research suggests market deterioration around these trading halts. For instance, increased trading activity is closely associated with increased volatility for both the NYSE and the NASDAQ. Extrapolating their results to today's mostly electronic markets dominated by algorithmic trading is problematic. Much of the prior literature analyzing trading halts from excessive information asymmetries and low level depth. But here they study two technological glitches that result in two separate trading halts, one at the NYSE and the other at EDGX. Their analysis is the first to look at halts resulting from technological malfunctions rather than resulting from information asymmetries or low depth levels. Our contribution to the literature, he says, is that we examine trading around these technological malfunctions and document market quality before, during, and after these halts and across many exchanges, as well as over a reasonably long period of time. Additionally, we extend current research on the behaviors of algorithmic traders during stressful market conditions by observing algorithmic trading both during and after these trading halts. I think a lot of you people have seen those on the markets specifically, and especially when stock prices start getting out of hand. Trading halts. The most common type occurs when pending news significantly impacts a security's price or when there's uncertainty about a security's ability to continue to meet a market's listing standards. All right, so these are a regulatory trading halts. No trading takes place in a halted security on any exchange during a regulatory halt, but non-regulatory halts occur when an exchange experiences significant imbalance in a security's pending buy and sell orders. Non-regulatory halts, however, do not preclude other markets from trading the security. Okay, so this is telling us that when you don't have a regulatory trading halt, a non-regulatory halt.
That's when they pull the buy button.
Bingo. This guy saw it 28 days before it happened when he turned this dissertation, this thesis in on the impact of market fragmentation on markets. He tells us specifically that non-regulatory halts do not preclude other markets from trading the halted security. So when these occur, then that means that the market makers and these players, these institutions, still have the ability to trade in their alternative trading systems, in their dark pools. It's one of the reasons why I believe that this directed orders, the delimit orders, and all the other changes that are being made by the SEC to dark pools and alternative trading systems are actually quite impactful. That is the reason that Virtue Financial, the market maker, just sued the Securities Exchange Commission for their most recent implementation of changes and proposals that occurred it was yesterday, December 14th. So in general, the underlying factor driving regulatory or non-regulatory trading halts as defined by the SEC is new fundamental information to be released by a firm or other information garnered by security analysts, prompting an order imbalance. And these guys, they also analyze technological malfunction halts that are not driven by informational events, nor an imbalance of orders, but are the direct result of a technological malfunction or glitch. Unlike regulatory trading halts in response to a technological malfunction restrict trading on the exchange where the malfunction occurs, but don't preclude other exchanges from trading securities affected by the malfunctioning exchange. Meaning, when the buy button was pulled and retail could no longer buy AMC, GameStop, COS, and a plethora of other meme stocks, they could still trade them. If you want to talk fraud, that's, in my opinion, the very definition of fraud and market manipulation. Early research looks at price movement around trading halts pre and post. And Schwartz, Hopewell and Schwartz back in the 70s and 80s and 90s found that large permanent stock price movements occur during the suspension period for both news and order imbalance suspensions. suggesting that both types of suspensions are related to the release of new information. He also alludes to the effect trading suspensions may have on market quality. They find that both the variance of returns and trading volume are substantially higher than normal in the pre-suspension period. Other studies confirm that both the volume and volatility are usually high around trading halts. They find that 50% more trades per halting interval, 50% more trade imbalances, and about twice the share volume occur around trading halts. Another pre-halt trading activity.
FOMO.
FOMO.
Selling, selling, and gambling squeeze.
Cash knows what's up. And market makers and hedge funds, family offices, lining up orders and sending huge orders into dark pools as well to occur at those very moments. Not to mention sales orders directly to the lit market. In order to provide more insight into pre-halt trading activity, there was another study in 2000 where they examined the relation between the limit order book and the post-halt reopening price, and between liquidity and post-halt volatility around the NYSE trading halts. They find the depth near the quotes is unusually low around trading halts. They find a dramatic increase in spreads and a surge in both market order submissions and cancellations just before order imbalance halts. Despite these findings, their results suggest that the change in market conditions is abrupt and there's little time for the NYSE specialists to draw liquidity to the market. The trading halts we study are the result of technical malfunction and not the result of informational-driven events. Because there is no informational event nor published order imbalance to observe prior to these malfunctions, there should be no difference in activity on days prior to the halts relative to all other non-halt days. So the hypothesis in the end was that the volume, volatility, depth near the quote, and quote spreads prior to a trading halt would be similar when there is no trading halts. Now I'm going to stop there, even though this is an excellent document. I really wanted to bring that up to you guys. Let me see if I can get to the right page. But I don't want to go into too much depth on this again because it's 294 pages, and I don't want to read this whole thing to you guys. But I think you get the idea here. He had a wonderful conclusion. But yeah, he talks all about the robustness, the temporal fragmentation of the tick size before and during and after the halts. And he does a fabulous job. I would be surprised if this guy didn't get an A on this PhD thesis in business. I'm struggling to get down to the bottom of this document because it's so massive. So I think I'm going to just call it on this document for now. I can read the conclusion on another stream for you guys. Basically, the conclusion is that when the market is halted, there's a vast deterioration in stock price and a massive increase in volume and manipulation. And the trades on these technical glitches, when the markets are shut down in certain aspects, they can still trade on the other exchanges, where retail cannot trade when the buy button is pulled or when there's other glitches, correct? And I'd like to use that as a segue into a big applause. Let's give a round of applause for the Securities Exchange Commission here. They announced charges against 8 social media influencers in a $100 million security scheme in which they used Twitter and Discord to manipulate exchange-traded stocks. Huge shout out to the SEC for this. And this is how it started. There was a $100 million manipulation scheme by some guys that you may have heard, such as on YouTube, the Stock Sniper, Ultra Calls as he's known on Twitter. Some other people that you might know on Twitter, like PJ Matlock, Mr. Zach Morris, Oh Hey Tommy, Notorious Alerts, COHEN, Lady Back, right? This SEC announced charges on December 14th against 8 individuals in a $100 million securities fraud scheme in which they used the social media platforms Twitter and Discord to manipulate exchange-traded stocks. According to the SEC, since at least January of 2020, 7 of the defendants promoted themselves as successful traders and cultivated hundreds of thousands of followers on Twitter and in stock trading chat rooms on Discord. The 7 defendants allegedly purchased certain stocks and then encouraged their substantial social media following to buy those selected stocks by posting price targets or indicating they were buying, holding, or adding to their stock positions. However, as the complaint alleges, when share prices and/or trading volumes rose in the promoted securities, the individuals regularly sold their shares without ever having disclosed their plans to dump the securities while they were promoting them. As our complaint states, says the SEC, the defendants used social media to amass a large following of novice investors and then took advantage of their followers by repeatedly feeding them a steady diet of misinformation, which resulted in fraudulent profits of approximately $100 million, said Joseph Sansoni, chief of the SEC Enforcement Division's Market Abuse Unit. Today's action exposes the true motivation of these alleged fraudsters and serves as another warning that investors should be wary of unsolicited advice they encounter online. That's how it started. This is how it's going. Have any of you guys ever heard of this fucker? He's a felon from currently residing in the state of New York, who I believe, if I recall correctly, was prosecuted, was arrested, charged, and convicted of various types of frauds and defrauding investors. Up until recently, he had a channel full of content that was pushing Clove, that was talking shit about AMC, that was pushing a lot of stocks that are mainly OTC stocks. GTII sound familiar? Clovis, CLOV, sound familiar to any of you guys? Yeah. He has deleted everything on his YouTube channel. And he was pumping Clove at the exact same time as the rest of these pricks on social media. No, actually, Adam TG Falls, he is a con. He's literally a convict. That's what a con means. He's a fucking convict. He was arrested, charged, and prosecuted for various types of frauds. Google it yourself. His name is Louis Bravo. Look him up. Louis Bravo. Anyways, I'm not concerned at all because I haven't done anything wrong whatsoever. I've disclosed my positions to people many times. I've told people, and you guys saw me on this very channel, when I bought $100,000 worth of AMC and APE shares. I also own thousands and thousands of call contracts on those stocks. And you guys would, of course, be the first to know when I sell them. I haven't sold shit. I've sold a couple stocks, now no shares. I've sold a couple of calls and things like that and a variety of other things, but nothing really with my AMC or APE shares and stocks and calls, I should say. I'm still holding them strong. I've got calls in January of 2023, and then I've got others for March of 2023, and I've even got leaps all the way out through January of 2024. I've got no problem saying that because I've also got no problem telling people when I've sold. And I haven't fucking sold any. So I have no worries whatsoever on that end. Reminder from Wall Street Silver that inflation is actually closer to 15%. You got to remember, this stuff is constantly reweighted. And things like energy and food prices are removed in percentages out of the CPI, Consumer Price Index, Consumer Price Lying Index, to make it appear as if we're at 7.3, 7.1%. Well, if you hadn't changed the calculation from 1980, we would be around 15 to 16% CPI right now. The alternate CPI in blue, according to 1980s based, not counting the, you can see how different it is from the reweighted CPI in red below it. That's the more recent one. This was published on December 13th of 2022. The Federal Reserve. The Federal Reserve today accepted they accepted $2,123,995,000,000 in reverse repo agreements from 98 different counterparties, paying them an interest rate of 4.3%. This is the federal funds rate of 4.25 plus 0.05%. Every single day, these guys are getting a 4.3% APR, and as the interest rates go up, they'll get more. People keep asking, how does this affect inflation? Well, what happens when more money is added to the money supply? It creates inflation and a devaluation of the dollar. Meanwhile, you're not getting anything. I'm not getting anything. We still have to pay all our bills. But I showed you these reports with negative residual assets, where they owe more in liabilities than they have in assets, using fair value accounting, and have dwindling trillions and trillions of dollars of dwindling assets and increases of liabilities month after month. Excuse me. In past market crashes, there's been more high weekly lows at or after the peak of the crash. Take a look at 1987. Down here, you can see the New York Stock Exchange weekly lows, percentage of total issues on the 50-week moving average, occurred significantly after the crash of 1987, where the VIX went up to around $170-something for the volatility index. You can see it here in 99, 2000 as well, and again here in 2008. When the market crash occurred, you saw immediately after, just before 2009, a new high number of weekly lows. Now today, you're seeing that number even higher. But the market hasn't crashed. And a lot of that is due to the fact that the volatility index is being suppressed in order to prop up the SPY. Now, I don't have charts and figures I can show you other than this sort of correlated data, because we don't get to see the trades that Janet Yellen, the head of the plunge protection team, gets to do in order to prop up the markets. You can see it in the swaps when the US dollar and other things are swapped against each other, you know, US dollar and other fiats and oil and so on. And you can also see massive amounts of failures to deliver by the Federal Reserve and by the United States Treasury. You can see the massive number of failures to deliver by the United States Treasury. A lot of that is in naked shorts on the VIX, in which they fail to deliver, and naked shorts on the UVXY, in which they fail to deliver, and shorting the VIX through the use of the SVIX ticker. Short the VIX, right? SVIX. They can buy calls and buy shares of short SVIX. They can fail to deliver. They can fail to deliver on the UVXY and on shorting the VIX with naked calls to the tune of tens of billions of dollars, if not hundreds of billions. This allows them to keep the SPY from going too low temporarily. People think that it can happen forever. Well, if that was the case, why did the market crash in 2020 and 2015 and 2008 and 2000 and 1987 and 1974 and the 50s and 1931, you know, and so on. 1907, and you can keep going back further and further, about every 7 years pretty much. But we're at a point in which the liabilities and the amount of money printed have devalued the dollar by 97%. It is unsustainable, ladies and gentlemen. A Ponzi always comes to an end. The first Fed hike in the 2008 market crash occurred in June of 2004. The first Fed cut occurred in September of 2007. But rates went from 1% to 5.25% in that 3-year time span. Now we're doing in March of 2022 through March of 2023 from 0 to 5%. Lehman collapsed a year after the first cut. We have a 3 times faster hiking cycle while hiking more than we did before the global financial crisis. Some people believe that this looks like a soft landing. Ladies and gentlemen, you ain't seen nothing yet. Big shout out to SQQQ Holder 1 on that one. I'm going to give him a follow for that. I like that, because that was a great post, and he brought up some excellent points there. We went in 3 years. We went from 1 to 5.25% back in 2007. And now we've raised almost 5 percentage points, 500 basis points. That's what we're supposed to do here through March of 2023. A 3-time faster hiking cycle, just trying to suck this ridiculous amount of liquidity out of the system. So even though we may have somewhat seen a slight peak on inflation for now, that doesn't necessarily mean that it bodes well for our economy, and I'll explain why. Take a look at what happened with CPI data in 2022 versus 2008. Cash, what do you think about this shit? Look at this, bro. Let me put this in performance mode over here. I think that's better. Okay, it's a little small, so in case you can't see it, I'll go over to this one. But CPI started to decline, leading to the 2008 global financial collapse. In 2008, the CPI was at 4.2 in May, 5.0 in June. Then we had 5.6 in July, 5.4, 4.9. And then at the end of August, beginning of September, we had a crash, put us down to 3.7, and then 1.1 and 0.1. Because there was absolutely nobody spending money. A lot of people lost their life savings. A lot of companies went bankrupt, went out of business, had to lay off workers. People lost their homes, their apartments, their cars, their hobbies, their families, everything. And we are at the same exact thing now, where we had 8.5, 8.3, then another similar month. September was 8.2, October 7.7, and 7.1 in November. In my opinion,
Yeah, very similar.
very similar, except we are nearly double where we were on CPI. And don't forget that this has all been recalculated and reweighted about every 6 months since 1980 to keep it low. Look at this blue line using the 1980 based inflation. Here in 2007, inflation didn't start. I mean, we didn't have a market crash until we didn't have a reduction in inflation until the market started crashing in 08. And that's kind of it's looking very similar to the big spike up, except that spike up is a lot higher than the one we saw in 2007 and prior. It's a very, very steep because the Federal Reserve and banks artificially printed 40% of all money in existence in the last 24 months. So I think it's only a short matter of time before we see that. And, full disclosure, I do have SPY puts and VIX calls and so on because I put my money where my mouth is. So it is what it is. In the meantime, we're going to take questions. I'll take questions from you guys in about 10 minutes, just so you guys know. In about 10 minutes, if you guys want to ask questions, I'll put it out there. You guys can drop any in the chat. But Danske Bank, Denmark's largest bank, pled guilty to defrauding United States banks and agreed to pay a $2 billion penalty. Huge shout out to Gold Telegraph for bringing this up on December 13th. I wonder how much fucking profit they made. How much money do you have to make to pay a $2 billion penalty and not go out of business? Quite a bit. It's the cost of doing business, isn't it, Cash?
Yeah, apparently.
Let's see. Should we get into this? You know what? Let's talk AMC. But before we do, I got my tickets to Avatar 2. How about you guys? Put it in the chat. Let me know if you guys got tickets to Avatar 2. I decided I'm not going to buy tickets. I don't want to buy tickets. I'm going to rent the whole fucking theater. Give me the entire showtime for me and my closest friends and family and coworkers. And I'm taking out some people that I work with and some friends and family to go see Avatar 2 this weekend at AMC theaters. I also picked up a 10-pack of popcorn and drinks so that we can all stay hydrated and well fed during. But there's no lie in the fact that AMC has already sold 100,000 plus showtimes for Avatar 2, and I am proud to say that I have one entire showtime, the entire fucking theater, to myself, my friends, and my family. So that's the way that I support my investments. Put my money where my mouth is, and then I back them up. period.
11 damage.
Oh yeah, brother. Oh yeah, we got Takeoff watching it on Sunday. Kershaw's Avatar on Christmas Eve with my family. That's beautiful. You know, I understand you don't have an AMC theater where you live. You know, and that's okay. I can't expect you to drive 8 hours to go to AMC theater. You know, like that's not feasible for everybody. But yeah, definitely gonna have a great time over there and check out Avatar 2. Looking forward to it. Which is with as good as the first one was, I could not be more excited to say that I'm supporting my investment in AMC theaters, and I'm taking my family and friends to go see Avatar 2. Also, signed up for the wait list for the AMC Visa credit card. Huge shout out to Adam Aaron, the fucking silverback. He says, on December 14th, Adam Aaron said, I keep my word to look for more revenue streams. As promised, we now announce the new AMC Entertainment Visa card, filled with extra AMC Stubs rewards. Early signups enter a sweepstakes for a trip to join me at a red carpet movie premiere. That is awesome. That is awesome. So if you're an AMC ape and you want to support the movie theater, go get an AMC Visa card if you want, you know, if you can do so. You don't have to use it, but they still get branding deal, more money for more people that sign up according to their branding deal with Visa, if per my understanding. Okay, that's my understanding of it. And you can find them at amctheaters.com/Visa. Pretty easy stuff. Sick Son taking his family to go watch Avatar on the 25th. That's awesome. Broke Ape, I'm not going to see it in 3D. No, I'm taking some little kids, and I don't want them to they'll be taking off the glasses, and then they won't be able to see it, and they'll get all, upset. So we're going to see it in the badass, high definition AMC theaters. I could not be more excited. I'll see it in 3D another time with some adult friends. But as I've stated before, I believe this is one of many documents, many documents, that proves that the rehypothecation of tokenized securities and or swaps can be used against these tokenized securities to locate shares. Okay, that made it smaller. Never mind there. So there's been a simplification and streamlining of documentation for ISDA SFT transacting parties, right? And where they use these to be of benefit is one of many being equity prime brokerage relationships, in which the prime brokers often enter into a variety of agreements with clients, including ISDA master agreements, which usually involves a portfolio swap annex or portfolio swap master confirmation, and documentation to provide securities lending services and rights of rehypothecation for the prime broker. Using the ISDA SFT documents would enable prime brokers to streamline their client documentation packages while increasing conformity of terms. Having all transactions under a single master agreement should simplify the process, is the point of this for them, when it comes to closeouts and understanding the effect of sanctions, currency controls, and other new laws on SFTs and derivatives. Having one master agreement means there's only one set of provisions to understand, making it easier and faster for them to act in times of market volatility. Gee, I wonder why they had to do that. Here's another. As mentioned above, this is from the 2011 ISDA equity definitions. As mentioned above, the OTC equity derivatives market consists of bespoke transactions with no standardization of trade types or of documentation. However, while these trades in their entirety are bespoke, it is possible nonetheless to identify specific trade components that can be applied uniformly across the market. They can develop standards around these components, allowing for the potential automation of these terms. These swaps and other components are automated and handled algorithmically now. For any given trade type, this would require the market to identify those terms and then separating those terms from those that are subject to wide variability. Now, my guy, RANDALLCORNETT, doesn't necessarily agree with me, but I think that, and that's fair, that's nothing wrong with that. I think we're all open to our interpretation of what's happening, and I think people need to look into it as much as possible and figure it out for themselves. Now, I know for a fact that even without this, there are a ridiculous number of shorts on AMC stock and on APE stock. Because as confirmed by Fidelity, the broker, when AMC issued the APE dividend, they literally doubled the number of short positions that were on AMC via AMC and APE by issuing this 1-to-1 dividend. So everybody who had one short on AMC now had one short on AMC and one short on APE. Now, these ISDA master agreements allow them to trade, in the repo market and various derivatives and stock loans amongst each others and to themselves, right? This is where it gets real good. The ISDA SFT document enables party to enter into repos and stock loans that reflect current industry standard economic terms for these transactions without reclassifying them as derivatives. Parties can use the various standard elections and other functionality set in the ISDA SFT documents to tailor their particular repo or stock loans to standard practices prevalent in either the U.S. or international markets, including the ability to post collateral for stock loans by way of a New York law pledge.
Share location, circulation.
There you go. They build on the framework of the ISDA Master Agreement, providing representations and warranties, closeout mechanisms, events of default, and other relationship-level contractual arrangements across stock loans, repos, and derivatives. If desired, the SFT documents provide flexibility for parties to customize these standardized provisions for their relationship. Now, these SFT documents allow closeout netting across portfolios of both SFTs and derivatives while continuing to retain the key economic difference between the portfolios. On the other hand, in certain scenarios that have a significant impact on trading relationship but do not involve defaults, the ISDA documents give the flexibility where appropriate to close out SFTs without closing out the derivatives portfolio or vice versa. This is an example of put options hedged by a stock loan here. This isn't too key to what we're talking about, so I'll skip it. But under these programs, an entity, usually a special purpose vehicle, will issue notes secured on collateral. This is typically in the form of securities acquired by the special purpose vehicle, although a synthetic exposure to the securities may instead be created via a swap. Synthetic exposure to the securities may instead be created via a swap. Ladies and gentlemen, in my opinion, this, aside from all the shorts marked as long, aside from the naked shorts, aside from the reported shorts, aside from the married puts, married calls, divorce puts, divorce calls, aside from the rehypothecations, aside from the futures and the other contracts and the other ETFs used to short, and the ETF baskets used to short AMC and GameStop and other meme stocks, this allows the synthetic exposure to these securities to be created via a swap. Now, this is important because these tokenized securities, these tokenized securities that FTX created, I think they had over 500 million tokenized shares of AMC, but they didn't hold a single fucking one. Sam Bankman-Fried said that I'll quote, I'm pretty sure I'm going to get this correct. He said, he said when he was asked, were these tokenized securities held by FTX and meme stocks like AMC backed 1-to-1 by the underlying stock? He said, I quote, to the best of my knowledge, they were. Now that is a way of saying that I was told. So that way in court, he can say that I thought that they were, and to the best of my knowledge, they were. That doesn't mean that the AMC tokenized securities that are not sponsored by AMC whatsoever were not held 1-to-1 by FTX. However, these synthetic swaps were still able to be created to give them the exposure via the synthetic exposure, these synthetic replication of not an ETF.
Well, they slightly oversold the floats.
Yeah. So they're not giving synthetic exposure to the exchange traded securities or the index or the basket of securities, but they're giving exposure to the tokenized security through the underlying, which was never there, which in my opinion makes them phantom shares because they never existed in the first place. They're like a ghost, right, Cash?
Oh yeah.
So the equity swaps are intended to synthetically replicate the price performance of an exchange-traded fund or security or an index or basket of such securities. And now, digital assets, getting exactly to what we're talking about right now, these tokenized securities. Most digital assets, particularly native digital assets, are currently unlikely to be viewed as eligible collateral satisfying mandatory margin requirements under the applicable regulations of major jurisdictions. But that doesn't mean that they can't be used as share locates. That doesn't mean that the swaps can't be used to manipulate the stock price. These
Bingo.
tokenized securities are a bilaterally netted security. That means that they can create swaps against them. Here you go. There remains a degree of uncertainty over whether and in what circumstances other asset-referenced digital assets for which the underlying qualifies as eligible collateral, for example, certain security tokens, would themselves qualify as eligible collateral. So some may be used as eligible collateral, some may not. And many, most likely, can be used as share locates. Many may not be able to be used as share locates. But we can see parties may be required to transfer to cash, securities, or other property as distributions, but it's unclear whether the requirements applies to airdrops in the context of digital assets. The application of default interest to digital assets also requires clarification. The nature of any security interest granted over these digital assets depends on a variety of factors. The location of the asset, FTX, Bittrex, etc., the forms of security that can be granted under the applicable law, and other regulatory requirements applying to posted margins such as segregation. ISDA is giving a very loosey-goosey interpretation to these, digital tokens, whether they're pegged to and collateralized by fiat currency, if they're, like CBDC type stable coins, or whether they're security tokens such as the tokenized securities that we saw in FTX and Bittrex. Now here's another one. This is not sponsored by AMC whatsoever. It's called Mirrored AMC, MAMC. And up until recently, it was available on Binance. Here you can see it says this coin is not listed on Binance for trade. However, if you scroll down here, you can see that it was 30 days ago tradable on Binance, it appears, because they had a price of 97% decrease over the last 30 days, where the price was about 79.797336 30 days ago. Today, it's zero. The reason it's zero today is because they unlisted it. Okay? They have a circulating supply of $0. That doesn't mean that they don't have any of them available. Because here you can see that the live price of Mirrored AMC is 0.8212. How can that be here as if 30 days ago it was at 0.79? But again, that went down 97% because they're now showing it as zero. And it is now no longer available for trade and service on Binance. This is just one example. You can see there's still a 7-day price change. However, the 24-hour and the 1-hour and the all-time high is non-existent. And they have null for the market information because they're not providing the information to the general public.
Yeah, really sus.
That's suspicious as fuck. Now, let's take a look at FTX. FTX had around 500 million TSO'S against AMC, and there's only 516 million shares, and retail owns 85% of the float. Not to mention, Bittrex had 625 million shares of AMC, but they never had a single share, most likely. They just have tokenized securities. So that's 1.1, almost 1.2 billion shares of AMC that were never purchased, but were used to short the stock with the use of swaps. And Bittrex created GameStop and AMC tokens on January 28th, 2021, the same day that the buy button was pulled from retail investors. Now, this does not mean that correlation always equals causation, but it is way too goddamn close on the timing. This is not, in my opinion, any sort of accident whatsoever. Not at all.
Yeah, well, how many coincidences are there coincidences?
Yeah. The tokenized stock's value, according to Bittrex Global, said it's based on and collateralized with the underlying asset, a traditional security, typically a publicly traded equity like AMC or GameStop, and the value of the digital asset is determined by the value of the traditional security. Here's the kicker. They said they're collateralized by an equivalent notional amount of the traditional security, i.e., $100 of the debt derivative would be collateralized with $100 of the traditional security. How can Bittrex have 625 million shares of AMC when there's only 516 million shares issued? And retail owns 85% of those. And shorts have 21% short interest. And ETFs own another 5%. And institutional insiders own about another 4 or 5% of that.
Or was brr.
All I hear is the goddamn money printer going, holy shit, we're going to be so fucking rich, bro. Oh my God. The amount of manipulation that's occurred on these stocks is fucking ridiculous. Now, this is an adult channel, so if any of that offends you, please find the door, because this is the way that things are going to be around here. It's late night with Boss Blunt's Think Tank, baby. As you can see at the bottom, tokenized stocks may also include leverage, as well as long or short exposure. Literally telling us they can be used to short the fucking stock. Tokenized stock may or may not have collateral behind it. The tokenized stock without collateral is a synthetic security that the crypto exchange or intermediary writes into existence on the blockchain somewhere. This matters because if that somewhere is some tiny island, investors may or may not have recourse if the service provider hurts investors. Gee, what happened to FTX? I know a lot of YouTubers like Matt Kors and stuff were really pushing FTX hard. And now FTX, along with BlockFi and 125 plus other exchanges that were linked to them, and even more that are seeing the contagion, are now completely insolvent or bankrupt or both.
Yeah, what mess?
Sam Bankman-Fried hired a Citadel employee to expand FTX. And this is what happens, ladies and gentlemen. You know what? Oh, wait, there's more. Hold that thought 1 second here. You know what? I can't find the other one right now, but it doesn't matter. We've got enough fucking tabs going here already. Let's just get right back to where we left off. You guys can see we talked about the SEC and $100 million security scheme in which they're taking down influencers, and which influencers are now removing all the content from their YouTube channels and Twitters. CPI is over 15% if you use the 1980s based CPI calculations. Money market funds, banks, and hedge funds are getting 4.3% daily interest, I should say, APR, on their overnight bailout from the Fed. The Fed is not a government entity. They are a privately owned Ponzi scheme. Take a look at the old and the new VIX back in 1987. Look, making 50-week new 50-week moving average high number of weekly lows on the New York Stock Exchange after the 1987 collapse, after 2000 collapse, after the 2008 collapse. But now, this time, we got an all-time high of weekly lows on a 50-week moving average.
Yeah, right. What the hell?
But the VIX is at like $24, $23, right? This is a fucking joke, man. Like, I'm going to go... I'm pretty sure... I'm not telling anybody what to do. I'm pretty sure I'm going to go buy more fucking VIX on Monday or Tuesday. This is awesome. Because it's just so ridiculous that the writing's on the fucking wall, man. Look at CPI. again, started dropping after 2008, and then we had the market crash. And now it's starting to drop after 2022, and let's see what's coming next. Gee, who fucking could imagine? Banks getting fined billions of dollars. Yeah, let's move on from that. AMC Theaters, we talked about the Visa card. I'm renting a theater to go watch Avatar 2. Going to go support my fucking investment. And now the digital tokenized securities, the digital assets used as collateral. We know they can be used as collateral. They can be rehypothecated. There can be swaps created against them. And companies like FTX and Bittrex combined have more than double the fucking float by themselves in synthetic shares that don't really exist. So they're more phantom shares than anything because they never purchased them to fucking begin with. And if they did, they sold them a long time ago.
Yeah, I mean, goddamn. Someone got caught.
Yep.
Double dipping.
Meanwhile, you got companies like Robinhood not allowing you to create recurring investments in Ape, right? If you go to create a recurring investment and you want to put $50 a month or $50 a week into Apple, no problem. But if you want to do it into Ape, sir, Robinhood comes out with this. Recurring investments not supported for Ape. AMC Preferred Equity is currently set to position closing only, which means it's not available to buy. That's fucked up, ladies and gentlemen. That's Robinhood for you right there. As you can see, it's a direct screenshot. Now, this isn't for placing an order. You can place a limit order, but you cannot place a recurring investment for Ape. I wonder why. I wonder why they're so worried about people placing recurring investments for Ape, but not any other fucking stock on the market. Now you've got Wealthsimple. Now this is nothing new, but you've got Wealthsimple as of last month, November of 2022, stating that NASDAQ and New York Stock Exchange securities are subject to payment for order flow on their platform. You cannot opt out of payment for order flow on Wealthsimple now. This didn't used to be the case, but it is now. They said, does Wealthsimple accept PFOF? Now, there's a lot of PFOF brokers like Robinhood and Webull, and now, Wealthsimple is one of those. They said Wealthsimple may receive payment for order flow on U.S. listed securities and options. This means that Wealthsimple may earn a rebate for routing clients' orders to a market maker for trade execution when handling orders for U.S. listed stocks and options contracts. They're pretty much double dipping, as my friend Pantheon AMC likes to say. He's got a fantastic video on this and shows us that brokers in Canada that have an American counterparty can issue the trade to their American counterparty, who can then use payment for order flow to route it, even though your broker might be able to tout that they don't use payment for order flow. The broker's broker can. That's fucked up, isn't it? And see, he says right here very eloquently, Canadian brokers have been using PFOF for a long time, as long as they have a U.S. branch or affiliate. Pantheon AMC, you can check out his YouTube channel. He posted a video on it on February 25th of 2022. You can go to Pantheon AMC on YouTube and check out his video from February 25th. Now, they like to say that PFOF is a common practice between trading platforms and executing brokers, and clients are not able to opt out. Most Canadian brokerages accept PFOF on U.S. orders. That doesn't make it a good idea, and that doesn't make it good for retail, but it does make a shitload more in profits for the broker, the market maker, and anybody else that decides to front run that fucking trade. Now, ladies and gentlemen, that's one of many reasons I didn't come here to do business or anything like that. But sometime in September of last year, I came to the conclusion that the reason that this is occurring is because there's not enough retail investors in the financial markets, in the sense that we're not well represented. And I'd like to change that. One of the ways I'd like to do that is by starting a broker-dealer that does not accept payment for order flow from price distorting dark pools. Okay, we are not currently a licensed broker-dealer, but we are currently in the application processes with FINRA, and it is a long process, but I am confident that in the end we will prevail, and I will be more than happy to come over here and share that with you guys. In the meantime, if you would like to sign up for the beta, we are not soliciting anyone to buy, sell, or hold securities of any kind. Okay, but we are putting it open for beta if people would like to sign up to be contacted for beta testing when we do roll out once we've received our FINRA licensure. Now, to be clear, we are not currently a licensed broker-dealer, so please do not think that that is the case, but we are working on those approval processes. Check out LitExchange, litexchange.app if you'd like, and you can find it on my YouTube description if you'd like a link to it. We're here to empower retail's rights to market equality and to provide more transparency, the absolute highest quality user interfaces, charts, and educational tools for retail investors specifically. Because I don't give a fuck about maximizing profits. I just care about helping retail investors. And if I make some money along the way, well, so fucking be it. But I'll never fucking do it in a pump and dump scheme like some of these other assholes, Zach Morris and, you know, these other pricks that just got nailed by the SEC. So again, we're almost full on the beta tester. I think we've got under 500 slots left. Only the first 15,000 emails will be contacted to apply for beta testing when it becomes available. This is not a solicitation to buy, sell, or hold any securities or products of any kind. Kirsha, I can't give you any details yet because, again, we're not a licensed broker-dealer yet, so I can't give you any details like that because that would not be truthful. So for now, I'm going to say that you'll have to wait and see, and we will roll out as quickly as possible. But again, we've got to do everything by the book. I do everything legally, and that's why I don't fucking worry, because I don't do anything illegal. I have no fucking concerns whatsoever. But I'll drop a link for you guys in the chat. Hey, if you guys have any questions, by all means, throw them our way. You know, I know these whole like mirrored AMC and all these other different kinds of cryptocurrencies and tokenized securities that are being used to, you know, short the VIX. I mean, not only manipulate the stock market, but to, you know, trade against AMC and other stocks are very confusing. And I can't say I have all the answers, but you can get a lot of answers by reading, right? And that's what we've tried to do here. As we've had discussions, you know, myself along with other people that don't agree with me to try to figure out what's going on. Now, that doesn't mean I'm right, but I also don't believe that we need these tokenized securities in any way. However, it doesn't change the fact that FTX had 500 plus million shares of AMC that they never really owned, but still created tokenized securities that are able to be swapped against. And Bittrex had another 625 million shares of AMC, if my understanding is correct. And that's over 1.1 billion shares of phantom shares, again, on these tokenized securities that were never actually held by these companies, FTX and Bittrex. Now, who only knows? I speculate that companies like LedgerX are currently being used to hold some of these tokenized securities now that FTX and Bittrex are upside down and underwater. And let me see if I can find one for you guys. And I will try to post it here. And for those of you that are unaware, if you donated money to Ukraine via the mechanism of giving to FTX, you actually donated to Democrats in a rigged election funded by illegal campaign contributions laundered through FTX, which is increasingly emerging as the crypto hub run by people with globalist ties. Check it out. This is what I want to show you guys. Correlation does not always equal causation, but when the Bittrex issues shares on January 28th of 2021 of their tokenized securities, AMC and GameStop, the same day the buy button is pulled, and then FTX and Bittrex both pull their tokenized securities because they did. Bittrex said that they pulled their tokenized securities and FTX went bankrupt. The cost to borrow started to skyrocket. It went all the way up to around 380%, or I don't want to lie. Let me just go back and find the other one. Here we go. I don't want to lie to you guys. I know what I'm talking about here, but I want you guys to see it for yourself. So I'd rather show it to you if I can on my screen so you guys can view it. But it was high. I think it was around 280% average, 300% average after the collapse of FTX. Damn, I did a lot of fucking tweets on FTX. That's a shitload. Here it is. Bittrex and FTX shut down these toxic derivatives used to manipulate stocks like AMC. The result was the cost to borrow average in pre-market trading for AMC hit all-time highs. The fucking average, not the maximum, not the minimum. The average was 304%. The minimum was 304%. The maximum was 304%. Hello? That's over 40,000 shares that they had to borrow with a 300% plus cost to borrow average just in pre-market. And it stayed elevated in the 300% range for several days. And then after a few days, I believe they started using new exchanges and new tokenized securities elsewhere, like mirrored AMC and possibly on Ledger X and so on. And then they begun to trend that cost to borrow back down in order to try to maintain their short positions. Because as you all know, Citadel Securities, for example, has $67 billion in assets and $65.5 billion in liabilities sold short, not yet purchased. So they've sold securities, but have not yet purchased them. And that's using fair value accounting. That's not using what the price of the shares would be during a squeeze. That's just using their current value. The AMC cost to borrow began to trend downwards. Could it be that short hedge funds are using mirrored AMC tokens to hide the short interest after their FTX and Bittrex tokens became unavailable? It's highly plausible that a new token hidden from retail tracking, such as MAMC Crypto, unaffiliated with AMC Theaters, could cause that to happen. And that's why after a few days, you saw the average cost to borrow come down to 58%, the maximum 83%, and the minimum was still at 44.9%. Here's a few. This is when I first took the pictures of mirrored AMC and the Bittrex explanation of these tokenized stocks being used for long or short exposure. And they were, in fact, they were supposed to be collateralized by equivalent traditional notional value. Not to mention AMC 1230, those are the tokenized securities on FTX that they used to be called. They have allowed margin trading with up to 101 times leverage. 101 times leverage, ladies and gentlemen. How much leverage do you get in your fucking margin account? Do you get 101x? Because that's what these guys get. 101x leverage on these fucking tokenized securities, of which they never purchased the fucking shares. Jesus Christ. You know what, you guys? We're going to take 5 minutes. I'll answer as many questions as I can. If you guys have a question, drop it in the live chat now. I'll answer any chat I see for the next, answer any question that is not financial advice for the next 5 minutes. If you're going to ask me price targets, I'm going to tell you to fuck off, just like I always have in the past. Cali Bro Bear says they had to assign a dollar value and provide the ability to convert to the underlying security, not Bitcoin, but wrapped in cheaper cryptos, many types who had similar protocols, said the BRICS. Yeah, there's a lot of varieties here, you guys. There's varieties of tokenized securities like FTX and Bittrex and MAMC, and then there's wrapped securities such as like wrapped AMC, which is like wrapped in ETH being the crypto, and there are these contractual statements basically possible here that if this occurs, then that occurs. Then, you know, so if this price is reached, then this contract is traded or swapped or sold or whatever it is that they're doing. So there are a lot of swaps and contracts occurring here, both in my opinion, both between the tokenized securities and the wrapped. I think they're all basically classified as tokenized securities, but there's a clear distinction as from wrapped AMC to actual TSO'S, because TSO'S are issued by FTX and Bittrex and Binance, for example, but the wrapped AMC can be created by anybody. And that doesn't mean that you or I could create the same TSO'S that you find on FTX and Bittrex. They are still fairly different. Wrapped AMC is pretty much like a contractual obligation in which things can be wrapped. So there are some various differences there. But from what we read in the ISDA agreements and the ISDA information earlier, the fact that these TSO'S are considered these bilaterally netted OTC derivatives, that means that swaps can be used against them. and that's possible. That some of the language that we read in those other documents also proves that they can be used as share locates. And the broker dealer doesn't actually have to see the shares; they just have to have plausible deniability. So if the broker dealer has plausible deniability that those shares are real, they don't care where they came from. They don't care if it's a tokenized security with nothing underlying. They just say, okay, we'll borrow those and we'll lend those out. There you go, chalk one up for us. And that reduces their cost to borrow. Daniel, as I just stated, my man, I can't give any news for Lit Exchange because yet currently we're not yet a licensed broker dealer, and until we received our license and approvals from FINRA, I can't give you any details, because we're not technically seen as a licensed broker dealer, even though we've been in development since September of 2021. So I will give you details as soon as I can, my friend. Trey Spider said, did you hear about the Twitter space call with Dave Lauer and Gary Gensler happening tomorrow at 2 p.m.? Yes, I did. I'm very excited for that. You guys look out. I think it's 2 p.m. Eastern time. Look out for Gary Gensler and Dave Lauer space call on Twitter. That should be pretty badass. Yes, CW, I'll post a 200-page document. It is a dissertation, basically, a thesis on the impact of market fragmentation on thinly traded securities and stock exchange events, which delves deeply into a graduate school thesis here by Donovan Woods for his PhD for the University of Mississippi, delves deeply into trading events and HALTS. Looks like maybe he lost some points here for messing up the word impact, but I still think this guy got a fucking A. And this dissertation basically is in partial fulfillment of the requirements for his degree of the Doctorate of Philosophy and Business Administration for the Department of Finance, the University of Mississippi. Darkstar asks, do I think they will pass CBDCs? Central bank digital coins will most likely be implemented, and it'll be most likely after a market crash situation in which the economy is hurting really badly, and Americans will be forced to sign up for the CBDC if they'd like to receive stimulus, and eventually you may even have to use it to pay your utility bill and such. You may be forced to receive CBDC payment by your employer. You may be forced to pay your taxes via the CBDC. And I think a lot of people need to stand up against this and realize that this is not a good thing for the majority of people. Arby, is T90 a real thing? Well, my friend, that's not something that I can answer. I believe it to be a real thing, but that doesn't mean that it's the case. It doesn't mean that even if it is a real thing, that doesn't mean that the stock is going to move. The stock could go up a little, it could go up a lot, it could go down, nothing could happen at all. We will never actually know if T90 affected the stock price or not. We did see some minor increases in pricing here of the broker dealer of what I believe to be the selling syndicate of the security, being the dividend release of APE, AMC Preferred Equity Shares. But if that was T90 and it occurred, well, I would suppose you should see some positive price action. But again, I don't know if that's the case. They probably found other ways to manipulate it. There was 82 million volume a couple of weeks ago on APE, and their average daily volume is only about 17, 18 million. So that very well could have been rolling or delivering of positions for the T90 theory, but we'll never know for sure. We don't know how many shares they had if that was the case. They may, out of the 43 million failures to deliver on the ex-dividend date of APE, they may have only still needed to deliver 10 million shares, and that might have been where we saw that price action. But we saw AMC and APE and their derivatives basket of AMC1 increase in value quite significantly, around 18 to 25% respectively. And then they, of course, got shorted down very heavily immediately after. So it is what it is, my friend. I can't state for a fact whether T90 is a contributing factor because I just don't know. I don't have that. Nobody has that except for the broker dealers and the market makers, because the broker dealers are the ones that would be issuing the automated liquidation of positions against the short syndicate. Ellie, the main question is, will they let it squeeze and how high will they let it go? Will they be able to escape somehow from covering their shorts? Well, Ellie, as you saw back in 2008, And in 2020 and 2000 and 1987 and many, many other times, the market has crashed plenty of times. And when that occurs, margin calls go out. And when that occurs, it's not just from the DTC, but it's usually around the world, right, Cash? Companies, institutions, banks, margin calling those underneath them and those connected to them.
Yeah.
So, again, correlation does not equal causation, but it's mighty suspect that September 29th of 2008, we saw the stock market approach not all-time lows, but the lows of the collapse. And then about 30 days later, on the end of October of 2008, we saw Volkswagen start squeezing very heavily. Now, a lot of people say, yeah, but Volkswagen was owned by the corporation. Yeah, and AMC and GameStop are owned by retail. The only difference there is we're not one entity that's going to settle with the government for $1,000 a share. So what does that lead you to believe? Because I can't tell you what's going to happen, right? Because I don't have a crystal ball. And even if I did, who fucking knows if it'd be accurate? All I know is I'm not selling to my fucking bank. My brokerage account looks like an international phone number. And if I were to sell sooner, I'd let you guys know. I'd give you guys a heads up, The ISDA new rules change TS swaps. I'm not sure what the TS... are you trying to say total return swaps? Total equity return swaps? I'm not totally positive. But the ISDA rules make it easier for them and faster for them to implement swaps. Let's see. Pro Magoo Travis McGill says, "What should I ask Adam Aaron when I go to Avatar on Monday?" Are you going to get to meet Adam Aaron when you watch Avatar? That'd be fantastic. Ask him whatever you want, man. Just don't ask him some stupid shit that he can't answer, because he's not going to talk about synthetic shares and naked shorts and things like that. He doesn't have to. I think the data speaks for itself, and we've been in this. Those of you that have been in this for a year, 2 years or so, like I have, would be understanding of that fact. I know there's a lot of new traders that go, "Oh, well, what about Ape? It's getting crushed and this and that." Like, yeah, man, I know. Ape is a huge danger to shorts. It's a massive danger to shorts. When it was issued on August 22nd of 2022, retail owned 97% of all Ape shares. What the fuck does that tell you? That's more than AMC. That's more than GameStop. That's more than the vast majority. That's more than any other stock that I know of, ever. Biff Johnson says the DTC published an article on paying out CBDs for stock gains. You know what, man? If that's what they do, then that's what they do. I'll sign up, I'll pay my taxes, and I'll take my money where I need to take it to get it away from the CBDC. That's not an issue for me. If I need to buy a shitload of tangible assets, then I'll do that. Whatever I have to buy, whether it's precious metals or land or businesses or whatever, I don't care. I'll find a way to move my money where I need to move it. And if I have to pay my exit tax to the United States government, then so be it. They can make, a couple $1 billion off me, because I hope to make at least $4 or $5 billion. Let's see what happens, right? Casey, I'm sorry, I don't really... I don't really understand your question. There's not quadrillions of shares. There's not. That's an astronomical number. A quadrillion shares is ridiculous. It's absolutely fucking ridiculous. The things that people are talking about are tokenized securities, such as wrapped AMC. And that doesn't mean that there's a share underlying every wrapped AMC. That's not the case. But the brick says move fast if you get the CBDC payout. I mean, it is what it is. I got no problem paying my taxes, and that's what I would do. Pay my taxes and move on, and invest it in any way that I saw fit, whether inside or outside the United States. I'm not one-minded in the sense that oh no, what am I going to do with my money? The bank can't hold it. I don't give a fuck. I don't need the bank to hold my money. I can find a million other places to put it better than the bank. As a matter of fact, I don't have a bank anymore. I've only got credit unions and broker-dealer checking accounts and such. Trey Edwards says, I heard that dancer Twitch lost his life due to losing his life savings on FTX. I want to thank you guys for being an outlet for conversation. Truth is healthy. Keep it coming, whether good or bad. Thank you. I agree with you there. It's really sad. A lot of people lost their life savings. due to FTX and, people like Matt Kors and others that were out there pushing FTX and Webull, paying for order flow broker dealers and crypto exchanges and making big bucks. And as some of you might have seen, I've currently been approached by Seeking Alpha. Seeking Alpha tried to ask me multiple times to basically to shill for them. And I have no fucking interest in doing that. And this isn't just a general statement that I'm making. I'm going to pull it up on my Twitter account so you guys can see it. They've asked me multiple times to contact them so that we can set up. Whoops, let me back up there. To discuss an agreement, and I did not contact them, and I never will because I do not care about Seeking Alpha whatsoever. I have no interest in being their affiliate. And this is the kind of shit that Seeking Alpha writes. Golfer Car Enthusiast says, Dog Lover says, for fuck's sake, boss, I see Seeking Alpha wants you to be an affiliate. They say they love your content. Well, they couldn't have looked very hard if they think this shit is in line with your outlook. In my opinion, these companies are absolute scum. And they said AMC cash burn and profitability issues put dilution on the table in 2023. Now, if you ask me, dilution is a fantastic thing because if AMC sells more shares of APE at whatever price, it'll cause the stock price to go up most likely. It's the same thing that happened in January of 2021. That's the same thing that happened in May of 2021 when they started diluting shares. And after the dilution was over, the stock price went crazy. And I'm happy for that. And I'd be more than happy to see them do that with APE and then to do a reverse split between APE and AMC and bring all the APE shares right back in AMC. So if AMC votes for dilution, I'm voting yes. Dilute it all. And if AMC votes to have APE, actually, I don't think they have to vote for that. If AMC delivers, allows, and chooses to do a reverse split and recall the shares of APE back into AMC, I'm all for that as well. And I would vote yes on that if that came up. Seeking Alpha literally keeps trying to fucking buy me, and I cannot be bought. Some crypto and some of these guys like Matt Kors, for example, and Graham Steffens, they were getting $25,000, $50,000 a month from these exchanges and from these mainstream media outlets. $50,000 a month, $2,500 every time they mentioned them. I got no interest in that. I already have a lot of fucking money, and I don't need to make money off of people and shilling this bullshit. Even if it is 50 grand a month, add a couple more zeros and then maybe we'll talk. Maybe 50 million a month, but yeah, 50,000? No, not even fucking close. Seeking Alpha Partnerships, affiliate at seekingalpha.com. Emailed me on November 20th. Hi, Marcel. I hope you had a great weekend. My name is Sarah Jaffe, and I am Partnership Specialist at Seeking Alpha. I recently came across your YouTube channel, The Butcher of Wall Street. The content you share is fantastic. We believe the community you built online will also appreciate Seeking Alpha's investor professional caliber investing tools. On this account, we would like you to see if you would be interested in joining Seeking Alpha's partnership program. If so, please let me know and I'd be happy to send you more details. Thank you once again. And obviously I didn't reply. And then about 2 weeks later, they came back to me at 5:56 in the morning saying, hello, I hope you had a wonderful weekend. I wanted to kindly follow up with you regarding the email I sent last week about Seeking Alpha's affiliate program. As I mentioned, our team was incredibly impressed with you and would love to have you on board as an official Seeking Alpha affiliate. I'm here for any questions you may have. I am also available for a quick call if you prefer. As you can see, I never clicked any of the links. I couldn't really give a fuck. I just took a screenshot of it for Twitter and YouTube to show everybody, hey, look, these are the kind of people, they're not the first. They're not the first at all. But when have you ever seen me pushing any company, other than letting you know of my own, that I'm starting from the ground up to try to help retail investors, dollars actually make a difference and a positive price impact on the markets and the stocks that they love. You haven't, because I've never done so. Go fuck yourselves, Seeking Alpha. Sarah Jaffe, thank you, but no thank you. Tell your affiliates and your associates at Seeking Alpha that they can shove it up their fucking ass. On that note, if you guys want, litexchange.app, check us out. We're not currently a licensed broker-dealer. This is not a solicitation to buy, sell, or hold any securities or any products of any kind. Don't take my word for anything that you heard here. Verify it for yourself. Go do your own due diligence, ladies and gentlemen. NTD says, I'm a little lost with the tokenized shares being in swaps. What type of swaps are these considered, and what else could they be added besides other tokenized shares? You see, these tokenized securities are an bilaterally netted OTC derivative. And that means that swaps, they're literally a derivative. That means that swaps can be used against them and traded against them. So they can use swaps to short the market. Which ones exactly? I can't tell you, because those go from the filing cabinet in one company to the filing cabinet in another, and they never hit the NBBO. They never hit the ticker. They never hit the NYSE. They never hit the exchange. We don't get to fucking see them. We don't get to hear them or smell them or taste them. All these ISDA swaps occur behind closed doors. And we don't have $2 billion to participate in the swap market. Not yet, at least. So, on that note, ladies and gentlemen, I appreciate every single one of you. We've been here for quite a while now, probably about an hour and a half, an hour and 40 minutes now. I've had a great time. Thank you guys for bringing up such amazing questions. I am incredibly proud to be part of the retail investor community. I'm a retail investor just like any of you, right? And I truly believe that the Mandela effect is real and that together we can change the fucking world. It's in your hands, in my hands, in our hands to make a fucking difference. This is my shot, and I'm not giving up my shot. I'm not throwing away my fucking shot, as Mr. Alexander Hamilton would say. Peace, everybody. I appreciate you. Wish you peace and wealth.
And we are the whale, guys. I mean, we own it 5 times over.
We're the fucking whale. Plain and simple.
Well, that's the thing when people talk about VW, they keep saying, oh, it's different, it's different. It is. Of course it is. But in some ways, I think it's stronger because you're dealing with people, say the majority haven't had it. But I don't know any billionaires that have been buying shares.
Well, you know what's wild? Wolfie, the Porsche settled with the government in 2008 and said, all right, that's enough.
Yeah.
That was one whale. We are the mother of all whales.
Yeah, there's no
Yeah,
settling
with
with
us.
us. There's no Wolfie. settling with us.
Yeah, with us.
Wolfie AMC.
We're the board, man. You cannot reason with us. You know what I'm saying?
Exactly.
We're going to assimilate you.
No matter how much they offer, there's going to be people saying, fuck that, I want double, triple, 5 times that amount. No matter
Exactly.
what they offer. Ladies and gentlemen, this is an autograph from the one and only Adam Aaron.
I
I offer
wanna see-
$100,000 a share, and I get. This is an autograph from the one and only Adam Aaron, and it was gifted to me by my friend Wolfie. Check this out. When he met with Adam Aaron in the UK, he had Adam. He handed Adam this piece of paper, and he asked Mr. Adam Aaron to write it to write an autograph for us. And Mr. Adam Aaron, the CEO, the silverback of AMC, wrote by hand to the think tank, all the best, Adam Aaron. And I would like to personally thank Wolfie and Mr. Adam Aaron and everybody in the think tank, particularly for this, for letting me have a piece of history in my hands. And I would like to share this with all of you. So thank you again. I could not be more proud to have this in my possession. This belongs to all of you. This right here. Cheers. We're going to be filthy fucking rich. I'm going to finish up with Wolfie's speech because he's fucking amazing. But I could not be more proud to have this in my possession. I guarantee you 40% of the people would be like, fuck you. I want 500. Not fuck you. You know? Fuck the market makers and the broker dealers and the short hedge funds that are trying to fuck retail. Thank you, Adam Aaron. Thank you, Wolfie.
And I want to see a bunch of motherfuckers who are literally evil and them on the fucking street. You know.
Same.
I can't wait
That's
for fucking Biden to get on TV and stutter away and say, all right, there's enough of this.
Is this real life?
And then the Fed. It's gonna
Is this
be
real life?
phenomenal. This is great.
Holy
They
shit.
might try to sweep it under the
just
rug.
cracked
They
30.
might just try to
That's
sweep
awesome.
it under the rug and be like, oh, all these
30,
hedge
baby.
funds fucked us. Let's never talk about this again. You know, and that's it. So. who
But that's
knows,
why I
brother.
love the fact.
Hey, Cash,
between
what sounds
5
that
and
fucking
10
money
million
printer
people,
make, bro?
Because the
Jerome
eyes are
Powell,
on it.
get the fucking money printer out.
When it comes out, you're going to have 5, 10
Would it be so
furries
goddamn
that have all got a tale
filthy?
to tell. You know, there's going
My
to be
guy!
serious questions asked to the regulatory bodies. What the hell happened after 2008?
Feelings
Why didn't you put
with
rule
the
changes in
list.
2012? And what do you mean the only thing you did of any essence was an SSR rule and then made market makers exempt? You know, they're going to be serious questions. But then they got on the other side, they got a massive transfer of wealth to people that are going to have the time and be open to be able to say what they did, what their role was, what their part was. And then I'm hoping that's the big thing for me is change. 5-10 million people suddenly come into a serious amount of money, if that's how it ends up, because no financial advice. But if it works the way, you know, those who have, for the reasons they have, expect, you know, I'm hoping that's going to really change. And when I look at the SEC rule changes, etc., that's what actually gives me even more. I know, you know, a lot of people are down because it took so long and this, that and the other, not really seeing it, but that's background. That DOJ announcement for me was massive. I think that's why people
damn,
get
that is
nervous
good
when people
confirmation
start
to have in
saying,
the
"Oh,
morning."
It's going to. And we've had, you know, I flagged it up, not that it got picked up on, but, you know, we've got real smart people that have been looking at this, real smart apes and DD done, etc. What if they was all meant to be correct? What if they were all correct, but because of everything going on in the background with the manipulation and the tricks and the market exempts and with all that going on, which is now known. I never knew none of this a year ago, 18 months ago. I never knew about market exempt. I didn't know they could do a naked share without a locate. And all this is coming out, and there are going to be serious questions saying, that's not liquidity. You know, there's court cases, there's a paper trail going back 20 years on this stuff. None of this is new. And when it comes out, it's blown wide open. It's not, you know, UK was
Over
told
30.
$30
yeah,
has
it
arrived.
ain't this.
Go ahead, brother. You were making a great point. Keep going, brother. Preach it.
Go ahead.
Yeah, sorry, I just got cut off and then everyone pulled in, so I sort of lost trail. But it's that paper trail, which it's the aftermath of us hitting a home run, where we would have done money, and yet we've been here. You know, 2008 woke a lot of people up, but a lot of people still don't know the truth behind that. They've all watched The Big Short, etc., but they still don't know the truth. They just see it as it's what happens in the market. This time round, and we've been told by all MSMs, you know, the Gasparinos and the, you know, I don't even like mentioning their names and give them airtime, but hold them responsible afterwards, because you're going to have all these experts that are on the telly getting paid hundreds of thousands of nice suits, talking down to us like we're all idiots, and insinuating everyone's like 16, 18, living at home with their mum, you know, never had to live in the real world. But come on now. This is people. These are the same people that the rules and the 1%ers and the stock market has ripped from your 401ks and lied to us. You know, this is blatant lies. This is theft. This isn't just the market and how it works. You know, dumb money loses money. Well, if you listen to the experts, everyone who bought AMC and only AMC has made a shit ton more than any of them experts have. And yet we're still held out as the ones that are the idiots. And when they want to talk and they want to go on and do their interviews, start talking about the real stuff. Because if you don't, afterwards you're going to have no credibility, because everyone's going to say, we told you, we told you, we told you. And you kept telling everyone not to put us off, because we was already in it, proved we weren't leaving, proved we weren't going nowhere. You came on MSN to tell everybody else whose money you had, every other investor, everybody who had a 401 and never invested in the market or a share or Apple, who lost their pension now, not because of us, we're the cure, not the cause. You told them that we were wrong and you were right. You told them we were dumb money, and you told them to go and buy Apple because it's going to hit a $3 trillion market, and it tanked. And they're the same people you did it to in 2008. My mum and dad, working 18 hours a day to pay a 17% mortgage because of some greedy bank that we had to bail out afterwards, we had to have austerity afterwards, we had to suffer afterwards, so that they carried on getting richer and nothing changed. Damn! You answer that. You tell the people that. You come back and you explain that.
Fuck yeah, that's exactly right. Man.
Goddamn
it's
right,
like-
brother. Nothing fucking changed. We lost our fucking pensions, 401ks, life savings, our homes, our cars, everything, our jobs. And then we had to give them billions of dollars in fucking bailouts. Fuck these banks. It's our fucking time. $30 fucking dollars. Let's keep it fucking going.
That's
This is our
right.
time.
Wolfie,
People
that's right.
are loving it, dude. Everyone feels that shit, dude. 100%, brother. Everyone is giving you so much props, man. You are fucking on point. Everybody knows it, man. No matter what the mainstream media wants to tell others, what they want to preach. I don't give a fuck if CNBC is owned by Citadel. I don't give a fuck that Pfizer owns CNN. We know what's really going on here. So thank you very much for that, brother. By all means.
Appreciate you, brother.
No worries, man. We've got to
Yeah,
speak up for millions that ain't here now. Don't forget, there's people gone from that. That 2008 hurt a lot of innocent people. And you'll be walking around. I do it every day. I've done it every day since January when I bought in. This was my chance to pay them back. But I walk around and it's like you see the scenes in some of the films when they're driving around in a car. I can't think what the margin called, the film. When he's driving around in that car and he's got the young lad next to him and the young lad's attitudes, I don't give a shit, you know, until he realises he's even going to be paid. But they're looking out the window and they're looking at all the people that just do not know. So if you're going to do things in your community, A1, top of my list, family, A2, top of my list, make sure you get that word out amongst the people you've got, because they call you stupid at day. Look at BRRR, he's been wrong more times than he's right, but everyone holds him up as an expert. He sees something that we all see. You know, DFE started this ball rolling in GME. That's going to do his thing as well. You know, all this infighting and stuff, that has to stop, because it's me, you against them. It's not me against you. I mean, how does that work? They want it. We got all the bots arguing with bots and we all jump in on it. No. Start talking about the people that were hurt, the people that have been forgotten. Go and have a look at the Wall Street Conspiracy, the film that they pulled 5 minutes before it's due to air in America. Go and have a look at Darren Saunders walking around with the placards on. That man died fighting.
Rest in peace, Darren Saunders.
You know, there's good people that ain't here today. We need to remember them and we need to be loud after this. It's not because we're rich, not because we're arrogant bastards that turned into the people that we're fighting against, but because we care and we want change. We want these fuckers held accountable. Running around in their planes when we can't even go out, can't even visit our mums. Come on now. Change. We need change.
Fuck, man, I will vote for you. Just
This is
fucking
our
run.
time. This is time for
Wolfie,
change.
President,
Bro, for real.
Prime Minister, everything.
Now I'm going to $1 million.
I'm not throwing away my shot. Merry Christmas, everyone. I wish you peace and wealth.